Hi guys, welcome to this episode of Earnings Express. Adani Wilmar's numbers have just come out, and it's a pretty weak set of numbers given the fact that the company has reported a net loss of 131 crore rupees versus the profit of 48.8 crore rupees in the previous year. There has been a one-time loss of somewhere around 53 crore rupees or thereabouts. To discuss more about the numbers and to put into perspective as to what led to this kind of performance in the second quarter, well, I'm joined by Angshu Mallick, who's the CEO of Adani Wilmar. Good afternoon, Mr. Mallick. Great to have you on the show. First of all, I want to ask you to give us some color as to what led to this kind of performance in the second quarter, given the fact that there is an element of a one-time loss as well. What would you attribute this one-time loss to, and what is the outlook for the coming quarters going forward?
See, we had informed that it's very unusual to see hedging losses where the markets, that is the CBOT market and the Indian markets, are not in tandem. Normally, it doesn't happen, and that is why you do hedging. But very unusual reasons happen when external environments are different, and all of a sudden you find that you buy and you sell, they don't match, and that is what has happened. So the losses are purely on the hedging losses that we have incurred. In operations, surely we have done better, but the volumes are so large that you have to have positions, and through that positions you have to keep them hedged. And in hedging, we did lose. One-time loss was around 53 crores that we had to pay against 2014 issue of entry tax, although we had contested for it, but then there was an amnesty scheme where if you pay a small amount, means whatever is that amount, reduced amount, then they will change over or remove that case, and that is how many of the industry people did, and that was a one time. We thought it is prudent to go ahead with the amnesty scheme, so it was a one-time loss. Other than that, our Bangladesh operations also, as you know, the difficult situation there about foreign exchange and all that. So we lost there on foreign exchange where we sell, but we cannot buy the local taka because it is not available. The dollars are not available, and that is how we lost a little bit there. Now that all this is now past for us, going forward from October, things have improved drastically. In fact, from September, it started improving. Hedging losses have now gone into tandem, and there is no such hedging losses now. So October onwards, we see one, good volume growth, and two, normal performance. The way we perform, even better than that, you will see in coming quarters. What is important at this juncture is, are we growing in volume? Because that is what is very significant for us. Yes, we have grown in volume, and overall, as a company, you will see both our edible oil, food and FMCG, and industrials, all three have grown very well.
All right, but you have of course pointed out that there has been some bit of recovery September onwards. But still, would you say that your focus will move more towards the foods and FMCG segment now? Give us some color as to what the revenue mix is looking like right now.
See, 2 years back, the food and FMCG was almost 10-11% of the volume. Today, it is around 18% of the volume. So our main concentration is developing the basmati rice business, non-basmati rice business, chakki atta, wheat flour, then maida, suji, rava, this wheat flour, complete portfolio, then pulses, besan, and the complete portfolio, and then we have poha, sugar, and other things. Now, the food basket is very big, and still today, the branded share of food basket is very, very small. So going forward, we feel that the country like India, with younger population, educated population, health conscious, people will buy more and more brand, and companies like us who start now will end up having great volumes. Now that you can see that quarter on quarter this year, this quarter, we have grown 50% in atta and rice business. In branded packed rice and packed atta business, we have grown at 50%. Now that is big. Overall, it may not be so big. We did around 19%. That is because export of rice was not allowed, and there we lost on the volume.
Hmm. Right. Let's talk about the demand trends as we are, looking at a festive season, right? So, how are the demand trends shaping up, especially in the rural end of the markets?
First is I'll talk about overall demand. Overall
Hmm.
demand, H2 is always a bigger consumption period than H1. That is primarily two reasons. One is your winter season, consumption is more, festive season, and big issue is the big thing that is coming forward is the marriage season starting 15 November. So that marriage season is really big, and we have all the products for the marriage. So for food, you need basmati rice, you need non-basmati, you need edible oils, you need bakery fats, then you need pulses, besan, and then host of your flours, that is the wheat flour and maida and all that. So we have the entire basket with us. So out of home consumption, we are clear. So India will consume more in H2, and we are prepared for it. That is one. When it comes
Hmm.
to rural, uh, our 30% business comes from rural, 70% from urban. In foods, this is little more, 31, 32%. So that means branded packed food is getting more into the rural market. Second,
Hmm.
the H2 is always bigger for rural in than H1. That is because one, it's winter season, so consumption is more. They have more money in their hands because October harvest is there, so they will get money in their hands. So they have more money. Little bit of marriage season, so festival season. So overall, the mood is much better in rural during H2. So I feel India will consume more.
All right, let's also talk about your Kohinoor brand. That has achieved a significant milestone of over 250 crore rupees in revenue. What about the other brands like the Fortune? How is that shaping up now?
See, Fortune for us is roughly around 35,000 crores brand.
Hmm.
Uh,
Hmm.
and that 35,000 crore has a Fortune range of products, which is edible oil, basmati rice, non-basmati rice, wheat flour, maida, and everything. So Fortune is very big for us because we export also in Fortune brand. Other than that, we have Kings as it's the third largest soybean oil brand in the country. Then we have Rag Gold. Rag Gold is the number two palm brand in the country, which sells more than 600,000 tons. So there are several brands in our portfolio which helps us add volume.
Right, you've recently introduced, a Lucknowi variant of, the Kohinoor biryani brand as well as, in fact, Fortune biryani kit as well, catering to the audience or to the diaspora in UAE as well as Singapore and Mauritius. Uh, Additionally, you've also launched brown rice, right, under the Kohinoor brand. Are there any other launches that we could look at in the second half of the year?
See, in Kohinoor Biryani, we launched Lucknowi. We are coming up with one more variant, which is Kolkata Biryani, because Kolkata Biryani is also very famous. So that we are bringing in. And for the Indian diaspora, we have put Fortune because we can't export Kohinoor. So there we have introduced Fortune in Australia, Mauritius, Nepal, Dubai, and many other countries. So that is started doing well, and we have good export order with us. We are also looking at some other products which are in the trial stage, and once they are ready, then we will get it out.
All right. Last couple of questions, really. You are looking to expand in the southern region as well, right? You're looking to gain market share there. Give us some color as to whether your efforts are, already bearing fruit, or how much time it would take to kind of jack up your presence in the southern end of the, India.
So in South, we have never been very strong, and we have always tried so. But this time, we have tried with not oil, but oil and atta. So two product, and we have rice. So there are three products integrated strategy where we are going to the market with the three products together. That has started showing some good results, particularly in Chennai, Hyderabad, where our atta is doing well along with oil and rice. So all this put together will give us little edge over our competition because we have a portfolio of product to offer to the retailer, and the retailer can make more margin from each of these products. So I think going forward, South will see some improvement in days to come.
Right. Lastly, I want to get your thoughts on the margin trajectory. How is it looking, for the rest of the fiscal, given the fact that, it has come in at 1.2% versus 1.8% on a YY basis. Do you expect to get back to the 2% mark anytime soon? And are you confident of getting back into the black in the rest of the quarters of the current fiscal?
I think our pain of hedging losses or disparity or unevenness has gone, honestly. So going forward, we will perform better than what we have been performing in earlier quarters. So Q1 and Q2 were bad, surely bad, but Q3 onwards, we will be back in action and back to normal, better than
All
that.
right. Hopes of recovery in the second half of the current fiscal. With that, Mr. Mallick, thanks a lot for taking out time and joining in this afternoon and sharing your thoughts, or in fact, sharing or giving us some color as to what really transpired in the second quarter. Well, with that, we're done with this, episode or this episode of Earnings Express. But of course, stay tuned to Money Control because coming up next is Commodity Corner.